India's central bank, the Reserve Bank of India, has announced its bi-monthly monetary policy. In a unanimous decision, its Monetary Policy Committee reduced the repo rate by 25 basis points to 5.25%, signaling a growth-supportive and proactive stance amid external uncertainties impacting India's economic outlook. Shyama Mishra has more from Mumbai.
RBI, in its last bi-monthly monetary policy of the calendar year, cut the repo rate to 5.25%, marking a total reduction of 125 basis points so far in 2025. The move is expected to lower EMIs for borrowers, easing the cost of loans.
The MPC voted unanimously to reduce the policy repo rate by 25 basis points to 5.25% with immediate effect. Consequently, the STF rate under the LAF shall stand adjusted to 5% and the MSF and bank rate to 5.5%. The MPC also decided to continue with the neutral stance.
Governor Sanjay Malhotra said RBI cited favorable conditions for easing as consumer price index inflation fell to a record low of 0.25% in October, well below the central bank's target. RBI also raised India's GDP growth forecast for financial year 26 to 7.3% from the earlier estimate of 6.8%.
CPI inflation declined to an all-time low in October 2025. The faster than anticipated decline in inflation was led by correction in food prices, contrary to the usual trend witnessed during the months of September and October. Real GDP growth for this year is now projected at 7.3%. This is up by about 0.5% from our earlier projections.
To inject liquidity into the banking system, Central Bank will carry out open market operations purchasing government securities worth 1 lakh crore rupees. It will also execute a 3-year US dollar INR buy-sell swap for $5 billion in December.
The Reserve Bank has decided to conduct OMO purchases of government securities of 1 lakh crore rupees and a 3-year dollar rupee buy-sell swap of $5 billion this month in December to inject further durable liquidity into the system.
However, RBI cautioned that global challenges, including geopolitical tensions and economic volatility, continue to influence the policy environment. The central bank reaffirmed its commitment to balancing growth with price stability, ensuring inflation remains within the target range.
The 25 basis point rate cut by the Reserve Bank of India is a timely, growth-supportive move as India braces for external uncertainties. With added support to liquidity, the Reserve Bank of India has now set the stage for smoother credit and steadier momentum ahead. With camera person Kapil Maske, this is Shyama Mishra for DD India, Mumbai.